Currency investors don't seem convinced EU leaders will reach an agreement on Thursday. The euro's trading around 141 to the dollar, nearer 1 weekly. Let's get an expert's view on what's going on in the market. Joseph Capurso is a currency strategist from Commonwealth Bank of Australia in Sydney. Joseph, good morning. Thanks for joining us.
Morning.
How soon, Joseph, before the euro tests that $1.40 level?
I think it will be certainly sometime later this week. I don't think markets should expect that the European Union politicians are going to be able to come up with some sort of magic bullets sometime this week. So I think there's certainly some more downside to the euro in the near term.
I mean, the Australian Central Bank even mentioned the European debt crisis, didn't it, in its minutes today, saying that Europe is a more significant risk for the global economy. I mean, how much of a risk is it for the Australian economy?
Look, it's more a risk to the Australian economy through what it can do to the financial system and for bank funding costs. But for Australia, in this part of the world, China is certainly the most important economy for us. And the signs there are the Chinese economy is still growing at quite a solid growth rate. So I'm fairly optimistic that that the Australian economy can get through this period of volatility in European markets.
Still, it seems as if there'll be no more interest rate hikes for the moment. That pause can possibly be extended, can't it?
That's right. I don't think we're going to see a rate rise in Australia till probably about November of this year, and that assumes that the Europeans are able to have some sort of workout of the Greek and Irish and others' debt problems. You don't have to solve those sorts of problems. You just got to just contain it within Europe.
I mean, the money, obviously, Joseph, is going into haven currencies. You know, it's moved into the yen, it's moved into the Swiss franc. But when we talk about these two currencies, you can't get too far away from central bank intervention. I mean, do you expect possible selling of the franc and the yen by authorities in the wake of the levels we've seen in recent weeks?
It's certainly a risk, and that's why dollar yen has been very, very volatile, flat as a tack the last few days. But I think the Europeans themselves are probably going to be less inclined to join, say, the Bank of Japan to intervene in their currency market, given that they've got their own problems to worry about. I think the Swiss are probably even less likely than the Japanese, because the weight of money of going into the Swiss franc, I don't think the Swiss National Bank is going to want to try and take that on. That just might even, in fact, exacerbate the problem.
And Joseph, very quickly, what's the winning currency trade right now, very quickly?
Look, I'm still very optimistic on the New Zealand dollar. They haven't started their rate rise campaign yet. While China's doing well, commodity prices should do well. So that's ultimately very good news for the New Zealand dollar.
OK, buy the New Zealand dollar. Thanks, Joseph. Joseph Capurso there from Commonwealth Bank of Australia.